Hey, good morning, traders. Welcome back to the live trading room. How's everyone doing today? As always, our usual check. Make sure you guys are hearing the voice, which seems like you are. Make sure you're seeing the screen, which should be good, and we can get into it today. I've got a lot on my radar today, which is cool. So a lot of stuff to discuss. But before we get into that, if you guys are new to live trading room, is an awesome experience where you get to trade live with not only myself but the great community of traders that we have in the room. What we do is we do top-down analysis on both swing trading and day trading opportunities. So longer time frame trades, more short-term trades, and really the focus is the process of doing analysis, right? Most of our members are premium members, which means they're going through a handful of different training courses, and they're looking for an opportunity to take what they're learning in the courses and practically apply it to the market. We also have a handful of traders that are trading full-time, that are done the course material, and they just use this opportunity as not only a chance to do what they love with another group of like-minded individuals, but to get more eyes on the market for more opportunities. So no matter what level of trader you are, there is something for you. Now, if you guys are brand new, I don't want you getting confused or overwhelmed with the terminology. That will make sense as you begin to learn about these subjects. That will make more sense as you spend more time in the live room. But right now, the goal should be, again, if you're brand new, is just focusing on the process. What is the process that we go through when looking for trading opportunities? And then just feel free to ask questions as much as you can, not only to myself, but to our traders here on the platform. How was your weekend, guys? Sorry to hop right into things, but again, I have a lot I want to look at. But how was your weekend? Mine was made a lot better by a Dallas Cowboys win last night, which I was a little bit scared. I went to bed. I didn't see the game since after halftime, so I was a little concerned about Dallas Cowboys doing Dallas Cowboys things. But woke up and saw that it was a complete blowout, which was excited. And I'm sure Cody was as well. Screen sharing should be on. Yeah, are you not seeing it? I can reload it for you if you're not seeing it. That's why I like to kill some time in the beginning, because I know sometimes it's not working for everyone. All right, let me see if you're seeing the screen now. Crystal clear. All right, so we got a good amount of news announcements coming out for today. We don't trade news here, but we do want to be aware of it. A lot of news coming out. Most of it's going to be after our live room is done, aside from trade balance. So we don't have to worry about it. Something that's not listed here that you may have to worry about is going to be just the whole trade war trade talks between U.S. and China. That's still going on. Announcements on that will come up sporadically. They're not listed. So that is something that will cause an impact on the market. Must be the app. Are you on a phone or a desktop or laptop? What are you using? We got one person still not getting the screen, so we want to see if we can clear it up before we get started. That'll be great. You're on now? Perfect. All right, so let's get started here. We're going to get started. I'm going to, again, use a combination of TradingView and NinjaTrader for this analysis. We're going to start with the dollar Canada. Just to give you an idea of what's on my radar today, I got Euro dollar, Euro yen, pound yen, dollar Canada, Aussie dollar, New Zealand dollar, Aussie Canada, Euro Aussie, pound Aussie, Euro Canada, and Aussie yen. So there is a lot here. And I'm going to try and, if I can, focus on the ones that not only give the best trading opportunities, but we may need to look at right away. So we'll start here on dollar Canada. Let me just make sure I have this in my notes. Dollar Canada, 5 minutes. Here we go. So dollar Canada, we're doing a few things here, right? So our most recent move was a Gartley pattern, right? We came down here on the daily. We formed a nice bullish Gartley, right? Target one should have been achieved on that Gartley, if I'm not mistaken. Yep, target ones were easily achieved in that Gartley. And now we're coming back up into basically the B level of structure, right? Kind of two levels of structure, right? This is the B leg of our previous advanced pattern formation. And then you can see there's a little bit of a consolidation in this area as well. And what you're noticing here, or let me ask you guys this, what do you notice here on the daily, right? Again, we're looking for the smallest clues on the market. How is price reacting as we get into this level? Are we starting to see more of a bullish reaction or a bearish reaction? Right? We're starting to see a little bit more of a bearish reaction. We can tell that just by the length of the candlestick wicks, right? High momentum candle shooting up, and then we have a nice little rejection here. We have a doji, which is indecision, and then we have another rejection candle here where price is spiking up, and you can see that selling pressure is taking control. So that's a little clue for me to look for potential bearish moves. Now, this isn't a real bigger picture trend continuation opportunity for me, right? We have not broken these previous structure lows, so it's not one of those situations where like, hey guys, I think we're going to go down to $1.24. But I do think we can retest these lows around here. So I do think there is a short-term opportunity for price to push lower. So what we're doing here is we're going through a process called IPDE, identify, predict, decide, execute. Sometimes I'll be real slow and methodical and walk you guys through it and go, hey guys, I, hey guys, P, right? But other times I'll just do my analysis, but no, it's always being taken into account. And it's funny, I got a question the other day. Let me see if I can read it to you guys on Facebook. And I didn't really know how to, wasn't really sure how to answer it. It's also election day here in the States. That's important. Where was it? So the question said this. It said, hey, Akil, considering that setups go in and out of favor, how do you decide which setup, in parentheses, complex setups, will be in your favor before you start your research? Example, when will bump and run setup with a target to 200 EMA be in favor again? Now, how would you guys answer that question if I were asking that to you? Again, I'll read it. It says, Akil, considering that setups go in and out of favor, how do you decide which setups, complex setups, will be in your favor before you start your research? Example, when will a bump and run setup with a target at the 200 EMA be in favor again? Any answers to that, guys? Nothing so far. I was waiting for someone to say that. What do your rules say? Latch says, I'm a bit lost. I don't really understand the question. That was kind of my initial thing as well. But here's the thing. And again, I'm kind of like you guys. I'm guessing, did most of you guys not really understand the question? Because if so, I didn't really understand it either. So I just said what I said. I said, I'm sorry, but I don't follow that strategy, so I wouldn't know what to do. I gave my little default answer. I answered it late at night too. But I think it's a tough question because it says, considering setups go in and out of favor, how do you decide? This is the part that got me. How do you decide which setups will be in your favor before you start your research? And here's the thing. We don't. Do we know what setups are going to be in our favor before we start our research? No. It's actually the other way around, right? And I always tell traders this, right? I never go into the market looking for trades. My goal isn't to look at a chart and say, what type of trades can I get today? Where are the trades at? Hey, trades, come on. Hey, trades, where you at? Where you hiding that trade? I know there's a trade here somewhere, right? I'm never looking for trades. I'm looking to do analysis. And I trust that if I do analysis, right, that's that IPDE, the right format. If I do analysis, the trades will pop out to me. And it always gets people confused when I say, hey, the first two parts of the four-step process, IPDE, the first two parts don't even involve thinking about trades, right? We're here on a daily time frame with Dollar Canada, and we're doing our IP, right? Or really just our I. We're identifying what has happened. We're just setting up the bias. All I'm doing when I'm looking at this chart is I'm saying, hey, there are some signs here that we can go short. And I'm looking at the technical and saying, is there room to go short? Well, yeah, dude, yeah, we can push a little lower. Not looking for any type of trade. I'm just looking to do analysis. And as I go down to the lower time frames, if the trading opportunity shows itself, then I'm in there. But we're not looking for trades. And when you're not looking for trades, things don't go in and out of favor. Either they pop up to you naturally or they don't. If they don't, it means you're forcing something. So I think it's a process that I think the process is backwards for this trader. But like you guys, I didn't really understand the question, and that's hence why I gave kind of the default coach talk. Trade your plan. Rap said favor as in higher. Yeah, I'm not sure what the word favor means. That would, and we all have different terminology for different things. So I just was confused with that term favor. Like it could have been like I forgot whose question was it yesterday in the Q&A about if you're already in a trade, like a graceful exit type of deal, could have been that as well. I just don't know, but it's an interesting opportunity to just the mindset is we're not looking for trades. We're simply looking to do analysis. So we have a short bias here, right? We're seeing some signals for signals for a potential sell. We also see room to the downside, right? So we're saying that, okay, I'm a little bit of a bias that says we're probably more likely to go short than long from this area. Is there room to go short? Oh, yeah, there is, right? So we kind of know our range. We kind of know from like here to here is where I'm looking at. And of course, you can go in and measure your risk tolerance or your reward minimums and see if this is enough room. As we go down to the lower time frame, the 4-hour chart, right, the picture gets a little bit clearer, right? So we're painting the perimeter, right? For you artistes out there, we're painting the perimeter, and then we're slowly working on the details. And we see something a little bit different here, right? We see those candlestick wicks, they turn into, probably a borderline double top here, right? Wouldn't be mad if you called this a double top, right? Come down here, still a little consolidation, and then this is the one that really stands out, right? Why does this candle really stand out? I'll go and delete my notes a little bit so you guys can see it. What's important about that red candle? Why is that the decision one? Or not the decision one, but that's a key candle. Yeah, that's when we violate it, right? That's when we violate it. And we know that as soon as we look for a violation, what should we look for next? A potential retest of structure. So now I had that short bias. It's like, okay, I think we can get short here. There's a little selling pressure. Right? Now I'm actually seeing a reason, at least a reason that I can use to get short, right? And you guys have seen this many a times, live room members, where I'm like, yeah, guys, I think we're going to go short. And I go down and I'm like, I got nothing technically that I can do, right? Aussie dollar was a good example, man. Won it longs all day long in Aussie dollar last week. And it violated a stupid level by a little bit, and I couldn't get my trade in. So this is one where we violate to the downside. This gives me a little confirmation. I know that this is a trading situation I can attack because I am a pullback trader. And then down here, I still have my target level, right? I still have this level. It gets a little bit clear. I think bigger picture, we had a much bigger level here. Let's go back to the daily real quick. And I am keeping an eye on the range bar chart, by the way, so hopefully don't miss it. Bigger picture, we're probably saying, yeah, we can probably go somewhere in this level, right? Like that. Right, as we go down, we can get more detailed. Again, starting by painting the perimeter and working our way in. And this level seems a lot more better for target taking, right? That 31 even level, right? That 31 even level seems a lot more better. Seems much better for target taking versus down here. Else is at that level. There was a completion of a Gartley. Yep. That was the bull Gartley on the daily chart. Yep. Going down to the hourly now, right? We're going to continue to get more detailed, right? You can see this consolidation. Clear as day for you guys that are creating kill zones, right? You know that your kill zone is going to be, here's your low right here. Here's your level. You know that anywhere within this level, this is where you're looking for tradable opportunities. Real quick, I don't think this is going to be a 127. But we may be on Cypher Alert as well. I don't think so. I think it's a little bit shallow, but just curious. Yep, a little bit shallow. So now within here, this is where you're asking yourself, what do I need to get short? Not only what do I need to get short, but where can I get short at, right? So let me ask you guys this. How many of you guys trading this would be taking targets at a retest of previous structural lows versus, say, the 131 even handle? Right? So something you can do is you can look at this, say, okay, I know my targets are going to be down here. If you know you want to have stops above these highs, let's say an ATR above these highs. What's our ATR? Like 1? 9. Ooh, fancy. All right. ATR is 9 above these highs, right? 131.70 it would be. You're probably going to be a smidgen above that, right? Then you can kind of reverse engineer your risk reward. If you're someone that requires a 1-to-1 risk reward, take your Fibonacci retracement. Measure. I used to have a professor, he would always say measure instead of measure. It messed with my mind every time, yeah. He's like, the correct measurement. I'm like, ah! But it sticks with me. It sticks with me. Measure. Measure your length from your stop loss to your projected target level, right? Right in the middle of that will be your 50% retracement. This will tell you where price has to retrace to if you want a risk reward of 1-to-1. Make sense? Now, so you can wait for this. I'm going to kind of sneak down to the range bar charts because that's where I'm looking at it on. I guess we should go 15.5. You can kind of see the same thing on the 5 actually. This is on the 15. So on the 15, you'll see it on the 5 as well. You actually have a smaller level of structure as well. So if you're looking for a more aggressive place to get involved, right? You can look to see how price action holds this smaller level. See this little kind of just brief retracement here? If you're looking to take an aggressive shot in this trade, this could be a level you're looking for as well. Hide stops right above there and put yourself in a situation where, again, I don't know where the entry would end up being. Gotta wait for your reason, whether it's a lower low, lower close, or double top. But you can put yourself in a situation where you have a much smaller risk, and it gives you a chance to get involved to the downside. So that's something you can definitely look for on a day trading perspective. So this is both in my opinion, this is both a day trading and a swing trading opportunity. Both a day trading and a swing trading opportunity. And this actually would have been, now that I look at it, this would have been an entry for me right here, actually. So I don't watch my day trading time frames until the live room starts. This was 7:15. But this is going to be, we're going to have an RSI swap, right? And we'll look at this on the range bar as well. We're going to have an RSI swap, meaning we go from an oversold condition directly to an overbought condition, right? Right up here, doji candle, lower low, lower close. This would have been an entry for me. Right at this candle. So we'll see if we can get the same thing on a range bar chart. Here's a range bar. Looking for the same thing. We haven't gone over, which is kind of strange because usually the range, my RSI is quicker on the range bar chart than the 5-minute. So typically I'm going to get overboughts and oversolds more frequent on the range bar charts. But we haven't gotten that swap here. But what I'm looking for a price action to go overbought, and then looking for a lower low, lower close entry. And what I can do here on the range bar chart, which is a little bit different than I can do on the 5-minute chart. On the 5-minute chart, I have to take targets, or on regular price charts, on trend continuation trades, say whether it's the 5 or if we're looking at the hourly or something like that, like a intermediate or swing trading time frame. I have to take targets at a retest of previous structure lows here. For this day trading opportunity, I can actually look at targets at an extension, right? So we talked about, anybody remember the level we talked about where price can potentially extend to? When we did our initial analysis, Yep, about 131 even. Right, it'll be interesting to see also if we take a Fibonacci extension from this swing high to this swing low. Look at that. We're going to get a 127 extension right at that level. So that lines up perfectly. Even handled number. 127 is the first extension you should look for when you're looking for a price to extend. So I'm looking for an opportunity to get involved short and ride it down to this level. So what I need again is I need that RSI to go overbought. If the RSI goes overbought, then I can enter on a lower low, lower close. If we don't go overbought, I'll have to wait for a double bottom. Or double top, excuse me, double top. Any questions about the dollar Canada opportunity? Source says, would you still look for bearish divergence on the range bars if we get a double top? Yes, yeah. Yep. Yeah, so I still look for the same thing. Again, overbought and oversold for a double top is preferred, not necessary on the range bar charts. But yeah, still look for bearish divergence. For me, bearish divergence it's not a make or breaker though. So it's like that stuff is not a requirement. It's you're typically going to get it when you get a double top, or a double bottom, I should say. You're typically going to get divergence when you get those type of setups. Not all the time, but 99% of the time. But yeah, it's definitely confirmation. Yep, definitely confirmation. All right, so good setup there on dollar Canada. AL said I had the same analysis, so I am happy with that. Perfect. Let's cross it off. Now, where do I want to go to next? New Zealand dollar is starting to move. We can look at that. Pound yen breakout. Let me ask you guys this. Were there any pairs that you wanted to look at? Perhaps if you have one that you wanted to look at right away. Because I have a lot to choose from, and I'm overwhelmed because there's so many good ones. But it's not always about me. It's about you as well. I got a quick question on New Zealand, Canada. Sure. Someone on the chat just wrote New Zealand, Canada. Hold on. James, are you in here, James? NZDCAD. Hey, Grissom. All right, last I got a quick question on New Zealand dollar. Can wait the. Okay, no, go ahead, Latch. What's the question about it? Again, selfishly speaking, most of these pairs that are on my radar aren't necessarily on my in my portfolio. Aside from the top, the first five. In New Zealand, we have time. Aussie, we probably have time. I've got pound yen, euro dollar. We definitely have time. Yep, so we'll look at New Zealand, Canada when Lash gets his question in, and then we'll go to pound yen after that. Euro Aussie is a good trend continuation one, lower time frame. That may be one if you're a day trader worth looking at right now. Same thing with Euro Canada. But yeah, let's find, do I even have New Zealand, Canada on here? There you go, hidden somewhere down there. Latch, you still there? Latch 1, I should say. Christian 1. What's all these ones? Got two of you, clones. And then we'll go to pound yen afterwards. Perfect. My target 2 extension is the more conservative option of 2 targets, just due to my target 2 extension is the more conservative option of 2 targets, just due to my conservative nature, but is would you say there is a way to milk the market between 183.93 and 183.75? So I guess first and foremost, what is your target to extension? And are you you got to give me a time. You know this. Come on, you got to give me a time frame. Let me know what I'm looking at. Time frame. I'm assuming you're looking to get short. All right, 60 and lower. All right, looking for a pullback in the structure. I'm assuming. And you're looking for a level between 83.93, which is right up here, and 83.75. All right. So you're looking at this level, structure based, to take target twos. And what's your normal target two extension? Structure. Okay, so what's the question then? Are you looking for a reason you're looking to maybe take it? Your initial target twos are at this top line. You're looking to take it at the bottom line, perhaps? I think it's also a decent possibility to go to the lower line. Okay. Well, here's the question you need to ask yourself, right? So what level did you get involved in? It was a very simple question. I should write down that we're on New Zealand, Canada. Forgot about that. Always forget to record this stuff. Write this stuff down. There we go. 184.27. So you're looking at a move from 184.27 down to 183.93. So you're looking at about, what's that, 30 something pips. Is an extra 20 pips worth the risk? So it's very similar to yesterday's lesson on maximum favorable excursion, maximum adverse excursion, where you're asking yourself, okay, is it worth the risk of not being hit? Because obviously this lower line has a lesser chance of getting hit than this upper line. Is it worth risking 20 pips to shoot for this lower level? That's the main question you need to ask yourself. Now, something else you can do is you can do more analysis, where you can say, this is my zone right here. Is there anything that tells me we're more likely to hit one part of the zone than the other part? And as Stuart mentioned, we can draw some fibs in. So the first thing we can do is we can take a Fibonacci. Let's do retracement first from our swing low, to our swing high. And we can see that right in the middle, we have a 50% retracement. We can take a Fibonacci extension from our swing low here to our swing high here. And back up, or a swing high, swing low, and back up. And we can see that we have a 127 extension. So you have a little bit of confluence between this 83.85 level and 83.78 level. So if you want to justify shooting for a lower zone, you can. But at the end of the day, the question still remains, is that extra 20 pips worth the risk? And unfortunately, that's only a question that you can answer. We know that the safest place will be at the top of our structure zone. We know that the most aggressive place will be at the bottom of the extreme test. And as a trader, part of your nature is understanding, am I conservative? Do I look for the very, very top? Am I super aggressive? Look for the very, very bottom? Do I perhaps perform analysis and try to find the ideal position in the middle? So I would say this. Here's an easy answer for you. Whenever I hear stuff like I'm trying to milk the markets for as much as I can, that typically means do not do it for me. Because if you're trying to milk the markets for as much as you can, it means you're trying to do something that you're considering doing something that your rules say you shouldn't be doing, right? The way the question made it seem and the way your zone laid out was that you said you're conservative. This top level is the level that you prefer. Would that be correct? Is that the level you're supposed to take targets off at? Or do you not have a level? Yeah. So yeah, I would stick there. Here's what I'm a big fan of. I'm a big fan of getting money and getting out the markets, right? I can really care less about milking the markets for as much as I can. And that doesn't mean I don't shoot for home run trades or bigger trades, but if I ever have a dilemma with profit taking, and it's the same thing in dollar Canada, right? If I ever have a dilemma in profit taking, right, my number one goal is to take my profit out at the first sign of danger. So the very first level in which I think the market could potentially reverse and leave me exposed with nothing to say for it, that's where I want to take my profits out at. So for me, I would shoot for the top of that level because that's the first level. If I were a counter trend trader, that's the first level I'd be looking to get long at. Now, does it mean that I may be leaving some pips on the table? Yes. Do I care about leaving pips on the table? Me personally, no, I really don't. So that's how I look at it. But again, we all need to have our own philosophy on what we do. Some people are more risky, right? It's no different than entries and stuff, right? Some people like, aggressive entry, get involved, limit order, boom. Other people are like, I need a 26.18. Real quick, did we go overbought? Sorry, just double checking on dollar Canada. We did not. Okay. So yeah, so I would look. I would take it at the top, me personally, but again, that's my risk adverse nature. If you are going to do something, maybe use that fib confluence zone and take it out to 50% retracement, 83, 85. But I mean, for me, more danger for 7 extra pips. That risk reward just doesn't. It's not worth it for me personally. I'll gladly take 7 pips less and have a better opportunity of winning. Let me real quick. I know a trader was looking at New Zealand dollar on the dashboard. He said, "Afternoon, guys. New Zealand, Canada. Excuse me. Is anyone else looking to get involved in this pair at all?" Wakil, I'm gutted to be honest. As I work full time, my lunch break is over. I will certainly look forward to watching the recording of it. You didn't tell me what the trade was, man. You still gotta tell me what it is. I can't help you. Okay. We'll leave it be. We'll leave it be. All right, real quick. This is continue on New Zealand, Canada. Since we're here, I'm curious. This one we had a wedge breakout to the upside, but we ran right in the structure. Now we're coming right back down. Wasn't on my radar this morning for anything. Just want to make sure. Make sure there wasn't anything I want to talk about here. Nope. All right. All right, let's head over to. I still think we have time on New Zealand dollar. Yep. I said pound yen. Sorry about that. I said pound yen. Let's go to the beast. The beast. Pound yen. This is one where I'm still looking for breakouts on pound yen. This has been a long time coming, and we just have none. We have done nothing on this pair. But still looking for breakouts, right? And we may have a shorter term pattern on there as well. But bigger picture, pound yen here on the daily, right? What is price action doing here? Yep. We are contracting. We're contracting. What does contracting lead to? Expansion, right? This is your classic pennant pattern. This is your classic pennant pattern. It's an impulsive move higher, right? High momentum bullish move higher, followed by a little bit of a slowdown, a little bit of contraction. We would expect an expansion from this level. So what that means is a break higher. Now, again, two ways of measuring this. If you're measuring kind of the trend line, you're looking for a break of your upper band here. If you're more horizontal support and resistance, you're looking for a break of about 141.50s. So we've identified what price is doing. We've predicted what price is likely to do out of this formation, right? There's three parts of our prediction. What is price likely to do next? The next part is where is price likely to go? So if we were to break out to the upside, then where are we likely to go to next? What would you guys say? Last says 144 even or just below. And that's going to be our previous beautiful descending triangle that we had earlier in the year. Yep. I would definitely say 144. Once again, you can add confluence to this if you're doing kind of like a traditional way of measuring it. I say traditional way, but I've never used it, so not traditional to me. But a traditional way of measuring kind of flag pattern breakouts, you can do one equal measured move of the flagpole. That's going to put us in no man's land. So I don't know how much that's going to do for you. You can do a range, right? You take the entire range. I know it's hard to see with these dotted lines, but you take the entire range of the pattern and predict the breakout of that much. That'll put you right back into that 144 level. You can also take a Fibonacci extension a little bit. Again, of the flagpole, swing low to swing high, and back down. And you can see that's going to give you some Fibonacci confluence right around 144.50s as well. You can also take a Fibonacci retracement, as Gabby mentioned, swing high to swing low. And you can see that 786 is going to be right on that level, right? So you're looking at areas of confluence right here. You've got a nice level of confluence basically between 144 evens and 144 50s. This is the pound yen, right? So those things, they're on top of each other. On many pairs, you're like, man, 50 pip range, like it should seem bigger than that. And the pound yen's a little bit of a different beast. They're going to be right on top of each other. So decently good level. I'm always structure first, indicator second, or whatever tool second. So I was looking for that same level, 144, 144 50s. What that tells me is this, right? We have the potential, right, depending on how you're trading it, anywhere from 140 50s, let's say, to 144 50s. Let me say that again, guys. You have the potential from 140 50s to 144 50s, right? Not really good at math, but that's how many potential pips there? 1 carried to 2 plus 3 divided by was it derivative of 400 pips? So what that tells me is this, right? Or what this should tell you is this, right? You can be patient here. Now, again, this is a faster mover than most other pairs, but you can be patient, right? There are multiple opportunities, right? We always talk about, different ways to involve yourself in trades. And I think what a lot of traders do is they think there's only one good opportunity to ever get involved. And when they miss that one opportunity, it's over, right? There could be plenty of opportunities. We can have a breakout. If you missed the breakout, whoop-de-doo. Look for the retest. If you missed the retest, whoop-de-doo. Wait for the next higher close, right? There's 400 pips to roam, right? It'd be naive to think that there's only going to be, and you never know, I guess. We did shoot up like 800 pips earlier, so you never know, I guess. But in most cases, you think you're going to have more than one chance to get involved in the trade. So start going through your plan where you're like, okay, plan one or plan A, right? Here's how I want to attack it. If plan A doesn't work, then I look for this. Or if that doesn't work, then I look for this, right? Start marking it out, your different ways to attack it. And as the market gives it to you, you know, cross them out or use them. Cody says, that bad boy's a mover, yeah. The Saquon Barkley pair. Let's hope it breaks higher because that will help my euro yen go down. Not necessarily. But you know how I feel about correlations. It won't necessarily make your euro yen go down. Not necessarily. All right. Zooming in some, right? Price action gets disgusting, but that's why we look at the daily, get a big picture view of this junk in here. Right? You can see here's our price action just kind of just contracting. I thought we go down to the hourly. Now here's what's interesting in the hourly. Depending on how you measure impulse legs, you may be able to make the case for an at-market bat. If you're looking at an X to A to B, I'm just going off the eyes of what you guys usually see. I know you guys very well by this point. You can make the case for an at-market bat up here at 140.56. You may be, I don't know. That's not going to be a cipher because we're going to be too far. Let me just double check just in case. But I don't think it's going to be one. Yep. Yeah, no way. So yeah, so you could make the case for an at-market bat here. Gabby says at-market cipher as well. If you look from, let me see if I can read your mind here, Gabby. If you look from here to here, that. So if you have it like this, you can look at that as a cipher as well. If you do have this as a cipher, right? Let's say we come down to this 786. You can also, it's not necessarily going to be at the bottom of your range, but you can also look at this cipher as an opportunity to really get an entry in and position yourself for that bigger potential break. So those are some options on the lower time frames. So as we go down to the 15 and the 5, there's not going to be anything here. But bigger picture is where it's at on the pound yen, in my opinion. Any questions on pound yen? Again, decent pair to pay attention to. I'd wait for the break. I'd keep a close eye on it and wait for the break. Any questions on the beast? All right, let's go to Euro Aussie next. That was a mover this morning. Let's see if it's still available for you trend continuation, guys. Oh, sorry. Can you do it from scratch? Just join the conference. Just join the conference. Can I do one from scratch? Do what from scratch? Analysis? Yeah. We do all of our analysis from scratch. Yep. So every single pair we go over from top to bottom. Yep. So it's never pre-analysis. I'm not just having my morning notes. I actually delete them because I like to challenge you guys to kind of think about it. And if you see notes on there, you kind of already know what I'm looking at. So yeah, every pair is done from top to bottom by scratch. And here's the cool thing, right? If you happen to shimmy in late, right? I know all about being fashionably late. You can always catch the recording. Does anyone else have choppy audio? So a few people are. Okay. Thank you for mentioning it. All these people were we're having choppy audio and no one mentioned anything. All right. I know I've been having my internet's been kind of weird lately, so it, probably on my end, I would guess, just because there's so many people that are saying it. So it's probably on my end. Um, Hopefully it's not too bad, but yeah, you guys know we had that I had that outage 2 weeks ago. So that's never a good sign. But yeah, just keep the fingers crossed. If we do have an outage for some reason, it usually takes about 20 minutes to kind of reboot everything. So just keep 20 minutes. Is it raining? Nope. It's just internet being dumb. I think the internet's like me. I get allergies during weather changes. I think my internet's kind of like me as well. Like when we get weather changes, it gets allergies. Starts sneezing a little bit. All right, we got a nope. We don't have a low close yet. Okay, let's go to Euro Aussie. Euro Aussie. Yeah, tell you, part of me still wishes I kept the office. What was it? 2 years ago? I guess now. A year ago. I love that space, and they offered some cool opportunities to do other things as well. There was very cheap space. It was a shared space, which was the one negative. But a very cheap space, and they had I had a deal in there where I can use. I had access to basically a full floor for entertainment purposes, which was pretty cool. Yeah. Access to a full floor for entertainment purposes, and there was about four or five meeting rooms that I could reserve and use. Although I only liked about 2 or 3 of them, so it's a good space. Then they brought in these salespeople, and salespeople are loud, making these sales calls every day, and I was like, you know what? Nope, not gonna be able to do it. Not gonna be able to do it. But it was fun. I met some cool people. I met a guy. His business, a lot of entrepreneurs in there. He organizes trips to the Himalayas to climb them. Like that's his job. I'm like, that sounds awesome. Then he started telling me about some of the war stories, and I'm like, okay, that doesn't sound too awesome. This guy's seen some death. He's like, yeah, you climb up and there's like a dead frozen body there. I'm like, okay, all right. Not as glorious of a job as I thought. I'm like, what do you do? He's like, you just leave them there. You can't do anything about it. I'm like, okay. Yeah, they're perfectly preserved. Okay, that's enough. No more details. So sometimes they're looking right at you. Hey, man, come on. Hey. I'll tell you what, right? Not to get too morbid, right? If I were ever to die, if I were ever to freeze to death, like on like Mount Everest, I would make sure to die with like the most awkward pose in the world, just to freak people out. If I'm gonna go on Mount Everest, I'm gonna have like this weird pose. I'm gonna like flip the bird at somebody. I'm gonna make sure I die in that position, just so I know everyone else that passes me in the future just has this awkward look. I'm gonna point at them like, you. That would be my. I always talk about my goal in life is to leave, provide value and leave a legacy. That'd be my legacy, man. I don't know what the pose would be. Open mouth, flipping the bird. Some weird like what's the? Let me see if I can. I'm just trying to think of like a weird. I always call it like the cat pose. I hate it. Like a lot of girls do. It's like an old school pose. Here we go, guys. Yeah. How about this? Just like that. That's how I'm going. I'm going just like this, guys. That's how I'm going out. Can you guys see that? Tell me that wouldn't freak you out. You just saw that. Hey, I'm dead. That's the one. That or this. This is my second best one. That one. That's how it's happening. Tell me that wouldn't haunt you for the rest of your life. I'd be a legend. I'd be a legend. I'd live forever in your minds. It already does, and it ain't frozen. Welcome to the live room, guys. I think look, that might be it, man. I'm about to put that in my will. Contort my body into this pose and just open casket when I'm gone. All right, so back to charts, right? Because this got ridiculous. Thank you, whoever brought that up, probably me. But Euro Aussie daily chart, right? Again, first thing we want to do in the daily is when we want to identify, right? What is price action doing? So what is price action currently doing? Doing it well. And pardon my pause. I'm trying to head down to. I want to keep an eye on dollar Canada again. That was the first pair we looked at. That's a trade I want to get involved in. But we're just not getting anything to do it right now. But yeah, we're currently trading below the spike. Right? So we're currently trading below previous lows. The question you want to ask yourself is, obviously you identify this. This allows you to make the prediction that we're more likely to continue lower. Is there room to go lower? That is the next question I want to ask. Is there room to go lower? Yeah, and I think there is. Euro Aussie is another mover, right? We can make the case that, we can test these previous closes right here, right? Fun fact for you guys that are, you like looking left, right? Ooh, look at that. Resistance, support, potential support again. Look right before that. Ooh, hits that level, right? That level, this line in the sand is going to be about 160.22s. We're at about 160.68s, right? So there is room to go lower. Now, when I see this, just having experience in the market and knowing kind of what's needed, I look at this as probably not a swing trading opportunity. This is probably not, that's going to do nothing for me on the 4 hour, but hourly and lower, right? And especially lower on the range bar charts, like we talked about dollar Canada, 68 pips it's a feast. It's a king's feast, right? 68 pips for a day trader. Shoot, 20 these days is a king's feast. At least a nice meal. So yeah, so I'm looking short. And again, the thing is I'm setting up my bias first. I hope you guys that are new, right? I hope you understand that. Do you see, I'm not talking about, hey, how do I trade double top, double bottom, flag, wedge, lower low, lower close, right? I'm just asking myself the simple question. What has happened in the market? Based on what has happened in the market, what do I think is going to happen next? Is there enough room for me to make money? You guys get that? It's process. Then once I have that bias, it does two things. It allows me to kind of focus on the pairs I want to focus on, but it also allows me to block out, right? Right? Block out everything on the other side. So we come into the market and we're typically, we're kind of confused. Okay, wait a second. I'll log out and log in when we get back in. Talking just to make sure that it's good. It said it good for 5 minutes. Are we still choppy? Buying time. This is weird. Not fun. Got to yell at my internet provider. Good. Okay. So now I lost my train of thought. Yeah, it also gives us a confirmation bias. So we're asking ourselves the question as well is I know that, or I guess we're telling ourselves, I know that I'm focused on one side of the market. I no longer have to waste energy on the other side of the market, right? I no longer have to waste energy thinking about how I can get long or this or that. I'm only focused on shorts. So I like to say I'm focused on my focus. So 4 hour gives us the same thing. We actually have a little bit of confirmation on the 4 hour because of the lower low, lower close by a smidgen, but we're technically there. We are looking for a move. We can look for a move back down to, again, higher time frames. We looked at, what was it, 61.20s. Down here, that zone's going to be a little bit shorter. Right? We see this little spike right here. This is going to be about 60.24, I should say. And what we're looking for is we're looking for a move to say, hey, can we go from 60.66 to 60.24? That's 40 pips. Or if we get a pullback, can we pull back into this previous level of structure right here? Right? 61 even handle and slightly above. And then rally down to that level. And that would open up even more opportunity. So let's head down to the hourly. Hourly, we can see the market starting to consolidate. Looks like we may be putting in a falling channel. So you can be on alert for two things here. We may just get kind of a sideways consolidation, which can set yourself up for like a flag pattern and a break to the downside. Or this could be the beginning of relief. And if we're looking for relief here on the hourly, again, the first place that's on my radar, this little consolidation right here. And right smack in the middle of it, or at the bottom of it, we have that 61 even handle, that psychological number. So this is going to be my first place that I'll look for entries. And again, if we want some confirmation or kind of to narrow down the zone, we could bring some Fibonacci's in there. We're going to have a 3D2 and a 50% right inside that level. So this is the first level I'll be looking for. And I will continue looking until we break the highs. Now, as we go down to the lower time frame, the 15-minute chart, again, you can see we start to go sideways. There is actually a bullish way you can take advantage of this too, right? If we start to go sideways, right, and create basically this sideways channel, you can then look to take advantage of both shorts or longs, right? If you want to take advantage of a short, what would you want to see happen? Yep, a break below. If you want to take advantage of a long, what would you like to see happen? A break above, right? And of course, with the long, you're looking for only a small area of relief back to your kill zone. With the short, you're looking for, again, a move down to that 60-20 level. So certainly a pair worth keeping an eye on. Again, for my day trading, I like going to range bars as well if I can find them. Here we go. I got these range bar charts all over the place. Audio is gone. Can you guys not hear me? Sound gone? Why is it doing this, man? Doesn't like me today. Raf says, nope, audio's still here. Sounds like I'm underwater, okay. All right, well, I'll have to reset things during our break then. All right, it's unfortunate. Can you guys hear me now? Okay. We'll finish up on this, then we'll take our break. See if we can get things fixed here. Let's go to Euro Aussie on we're looking at 50 range. That stinks, right? I would have the day where I have so much to talk about is the day where things get bad. So 5 range here on the Euro Aussie. You can see the same thing as the 5-minute chart, 15-minute chart. Obviously, you just get a clearer view. Right, so you can see kind of the consolidation happening. You're going to get a quicker view here of any type of potential breakout or violation before you would get it on, say, the 5 or the 15-minute chart. Make sense? And that's what we typically use range bar charts for, kind of a quicker view of the markets. All right. Any questions before we take our first break? We're going to make it probably, usually we do 13 minutes. I'm going to make it a 20-minute break because it takes a little bit more time to reset the router and have it come back online. All right, so we're going to take a 20-minute break. You're probably, Ressa, would you still look for longs though? Short-term longs, yeah. You can. Yeah, so the main, so here's the thing. So the main bias is short, right? But in our bias, right, one of the ways we were looking to get short was a pullback, correct? For you guys that still have audio. Right? So one of the ideas was, hey, we can pull back into this previous level of consolidation, right? And then that's where I'd be looking to get shorts. So if you're someone that's looking to get long, you can take advantage of this move right here. And this is kind of we talked about this in the Foundation 2 course about kind of you can trade trends within trends within trends within trends. But here's what's important to understand, right? If you're looking to get long, understand that the higher time frame bias is what? Short, right? So when you get long, you need to understand this, or you should want to understand this. I'm only getting long to a certain point, right? Where I think this is going to be the potential reversal zone for a short trade, right? So if I get long here, right, I'm okay trading it into this zone, but I don't want to get long until here. Does that make sense? And I think that's where a lot of traders get in trouble. They're like, yeah, we can get long, and the market kind of gives them this little brief retracement, but because their targets are up here for some obscene reason, they never take advantage of it. So it's okay to trade both sides of the market. That's what counter trend trading is, as long as we understand kind of the bigger picture. If I'm going to be a counter trend trader, I want to be more conservative with my target taking because I know I'm going against the stream, right? I'm swimming upstream right now. Still tradable opportunities, hell yeah. But I just want to be a little bit more, I want to be conservative, right? And you'll see me with my counter trend trading opportunities. They're all one in, one out, right? There's no two targets. There's no extension. I pick a specific level where I want to get in, I want to get out, and that's it. On the other hand, with trend continuation opportunities, that's where you'll see the multiple targets because now you're like, okay, I'm going with the flow, and you know the whole trend is your friend thing. We could continue longer in that direction. So good question. All right, so we're gonna take a 20-minute break. You guys are probably not gonna be able to see my screen because I'm gonna reset everything. But when it gets back up, let's just do this. Come on now I can't even. When it gets back up, you should be able to see the timer. But just look at your clock right now. You guys all got them. Count 20 minutes from now, and I'll see you guys when we get back. Hopefully, the internet problems are kind of fixed. All right, gang, we should be back. Appreciate you guys allowing me to take that extended break to reset things, and hopefully it's not as bad as it was before. If it is for some reason, guys, remember we do have the recording available, so that will be up for you. So far today, we've taken a look at the dollar Canada. We've taken a look at New Zealand Canada, pound yen, and the euro Aussie. Just a quick update on the euro Aussie. We're watching the range bar charts, right? We saw this consolidation. We did break to the downside. So once again, now we just reset, right? We reset the whole IPDE. We're still looking for the same type of move, right? The bias has not changed. We're still looking for 60-20, 60-25s around that area. If you're watching the range bar now, you're just waiting for the same thing. Pull back into this new area of structure / consolidation. And then an opportunity to continue lower, right? So again, it's the same tactic, just at a slightly different location. You just keep repeating it. Dollar Canada was another pair we're looking at from a day trading perspective on our range bar chart here. Again, this is one where I was looking for the RSI to go overbought. Looking for a lower low, lower close. Looks like we may be continuing higher. And this is just a good example of a filter, right? I don't know what's going to happen here. I can't predict the future. If I did, I'd win every trade. But it looks as if, right, price action may be looking to continue higher. If that's the case, then waiting for that filter, waiting for that RSI to go overbought instead of just buying at the lower low, lower close, even though we didn't get one either. So I guess that's another filter, would have allowed me to stay out of a trade that would have taken me out and saves me some money. So, filters can be frustrating. Reasons for entry can be frustrating because sometimes it kind of stinks to kind of sit there and be like, I need to wait for a reason for entry. I just want to get involved now. But we do all that testing, we do all that learning for a reason. And it's to keep us as safe as possible. It's to only allow us to get in what we consider to be the highest probability positions. So still looking for shorts here, just probably not going to be at this level on dollar Canada. You guys love this term. What do you think I could be looking for next year? Let's say we break these highs of kind of this mini head and shoulders bottom. What's another type of pullback that we get? There's a big hint. Yeah, complex pullback, equal measure move, right? So here's the next projection that we can make. Take our, measure the length between our swing low and our swing high, right here. Copy and paste that to our pullback. Now we can make a projection that, hey, we could look for an entry reason. Again, we're still looking for entry reasons until we clear these highs. Now we're just looking at a slightly different area, a little bit of a higher zone. This would be the same zone that we are looking at on the hourly chart as well. So nothing has changed with this opportunity. Still a decent trading opportunity. We just have to be patient and wait for our reason to get involved. And again, you should have, we got a question before the break, how do we know what candlestick formation to look for? And that's all part of the training process, right? There are many ways we can involve ourselves in trades, many entry techniques, going from the very aggressive to the very conservative. As traders, it's our job to decide what entry technique we're going to take or which entry techniques we can use per situation. But that's something that you do need to know in advance. So, you shouldn't be looking at a chart and be like, well, how do I enter here, right? You should know that well beforehand. And it needs to be rules-based and consistent. So that's the recap of what we looked at so far. Let's head over to Aussie dollar breakout. Let's go to Aussie dollar next. Let's quickly go to Euro Canada, and we'll do Aussie dollar after that. Again, just trying to, if you have pairs you want to take a look at, let me know. I'm just trying to hit the pairs that I think are more crucial to look at. And this one may be actually gone. So maybe we won't do Euro Canada. Yeah, so we'll go to Aussie dollar. This was a favorite of mine. Even that's doing the opposite too. Akil, excuse me. Will you call that a channel or a high and tight? The Euro Aussie, I'm assuming, or Euro New Zealand. What time frame on Euro New Zealand? What time frame are you looking at? Where is Euro New Zealand at? Oh, Euro Aussie, you mean this? This one right here on the range bars. On Trading View, Euro Canada. Euro Canada. We didn't look at Euro New Zealand. Euro Canada. Was it Euro Aussie here? Which I don't. We looked at Euro Aussie is the only Euro pair we looked at, so I'm assuming Euro Aussie. Maybe the 5 minute, because that's what we saw on the range bar chart. This right here, 5 minute Euro Aussie. Yep. Yes. Yep. Yep. And this is the same thing as the range bar chart. Yep. Just a different view. So same setup as the range bar chart. But yep. Yeah. Low and tight flag. Low and tight flag, sideways channel. Yep. And now a break to the downside. Break to the downside. All right, let's go to euro. I got euro in the mind now. Dollar. Come on. Aussie dollar. There we go, Akil. Knocked me out of my OODA loop. I'm all confused now. Let's go to Aussie dollar, right? This was a pair that was on my radar since last week. It is still on my pair this week. And the reason that, or still on my radar this week. And the reason being is I still think we have a good amount of room to the upside. How do you differentiate the high and tight from the channel, though? Really just a flag, any type of flag pattern. I mean, any type of flag pattern is going to be a channel or consolidation. It's going to be the move before it. So if you have an impulsive move before, just like if you have a wedge, this is going to be a wedge. If you have an impulsive move before it, then it's going to be a pennant. So same thing where you can have a channel that looks like this. If you have an impulsive move before it, it just ends up being a flag. So the actual movement is going to be the same no matter what. Only thing that makes it a flag or a pennant versus just a normal channel or a wedge is that it comes off a previous impulsive move versus kind of just consolidation in its own right. So the previous move. So here on Aussie dollar, what we've recently done is what? What have we recently done? What are we currently doing? What do you guys see? We had a higher high, higher close, and now a mess, right? That's what Latch says. Like we had a higher high, higher close, and now we're just kind of doing nothing and going sideways. It says broken structure question mark. Why the question mark? It either is or isn't. Which one? What's the question? Broken structure? We want confident answers here. Confident answers. Did we break it or did we didn't break it? Which one? It's a yes or no, black or white answer. Question. Question answer. Which one is it? I'm doing my squinty eye thing. I know you can't see me, but imagine me squinty eyeing at you. Yep, broken structure. Now, how do we know it's broken structure, guys? How do we know previous structure has been violated? Higher high, higher close. Yep. So this is the cool thing about rules-based trading, right? Again, doesn't take all of the subjectivity out of the market, but it removes most of it. Because if we look at this candle and you say, hey, I define a break of structure by a higher high, higher close in the previous level of resistance, there's 100 out of 100 traders must agree, right? If those are the rules given forth, right? 100 out of 100 traders must agree. And it's cool because it gives us confidence. There's no gray area. You can't say, hey, did we violate or didn't we violate? It's either yes or no. And that just makes our lives as traders a lot easier. So we violated structure. What I like about this is there's this open white space to previous highs. I mean, there is nothing going on until this level, right? And the beauty of that is because we had this straight drop from basically 171 down to 66.60s. So there's nothing here. So originally what I was looking at last week was a break above, close above, a retest, and a chance to get long. This was the opportunity again where I did get a chance on the range bar charts, which didn't work out. But on the 4 hour and the hourly, an hourly, I should say, we violated a level that really was that first level I was looking to get long at, so we couldn't do it. But what we ended up doing here is we ended up, again, higher high, higher close. We retraced, right? And then we came back up. We refused to violate previous structure highs, and then we came back down, and then we came back up, and we refused to violate previous structure highs again, right? So what does that tell you about this level? It tells you there's a battle going on, right? There is a battle going on, right? We are trading in this range. there is a battle going on, right? Buyers do not have enough oomph to push it higher. Sellers haven't had enough oomph to keep it lower. So just like any type of consolidation, what is eventually going to happen here? Similar to what we just saw in the Euro Aussie. What is eventually going to happen? Eventually, we're going to break out. Now, the question is, which way? And based on your answer to that question, that's how you're going to really involve yourself in the trade. So my bias is for a bullish break on this. And that bias is created for a very simple reason. Why do you think that reason is? Yeah, simply because of what I see in the higher time frame. Now, with that being said, what I need to see for a bullish break to involve myself in the trade, I need some confirmation. I need to see these highs taken out. I have a bullish bias, but price has yet to give me a reason to really believe that we're likely to do it. So I need to see a violation of these highs. And if we get a violation of that highs, that will give me confirmation that we're more likely to go higher versus lower. So that's what I'm waiting for here on Aussie dollar. If we get some trade talk announcement out today, that's going to have an effect on the Aussie. It historically has. So that could move the market. That's something we can't take into account, but that is something that can move the market. Let's go down to the hourly here. Clean things up a little bit. Hourly chart, you can see a beautiful reversal at the highs. My guess is this is what got Cody involved, right? As we came back to retest previous structure highs, right? A few things on the hourly. One, right, if we're strictly reading price action. I know exactly what Cody was looking at. Let me know if I'm wrong, Cody. We're reading price action. We've done this dance, right? Again, this is where I originally wanted to get long. But this violation is what disallowed that. That small little violation disallowed it. Probably would have been skunked out anyway, though, so it doesn't matter. Would have been one of those things that nearly misses targets and then probably stopped out for break even by the looks of it. So not a bad thing. But we came back up. We refused to make higher highs here, right? And then what happened? What was the shift that Cody saw here? He saw a new low. He saw a pullback in the structure. Now you want to be careful because we did higher close above here, but not here. We saw a pullback in the structure, and my guess is he involved himself in a short trade after this lower low, lower close, and an RSI swap was probably used as confirmation. Exactly. Look at that. Us Cowboy fans think alike. So you looked at this as a first strike reason of getting involved in a bearish trade, meaning that we had this rotation. Doesn't need to wait for confirmation because he's putting himself in a very low risk situation. And this is similar to what we looked at with kind of like just in the opposite direction of what we looked at with Euro Yen. And I got a question about this, about the low risk. He said, isn't a more aggressive entry like this higher risk? And I said, well, it's lower risk because of what you're taking on. And you think about this from a risk reward perspective. I forgot where Cody said he was shooting for targets at. 68.81. So at the lows of this channel, right? If you're involved in a trade right here, where do you know you're wrong at? Probably right where the risk reward's already at, right? This is your lower low, lower close entry. Stop's going to be above here. Let's just pretend like we're doing an ATR stop. ATR would have been at the time, would have been this green candle, which is 10. Highs are 69.28, so 38s. Yeah, I mean, right here, perhaps. And he's looking for 68.81s. Almost a 2-to-1 risk reward. So it's not a bad scenario. Not a bad scenario. All right. Now again, my view is the opposite. I want to see Cody win though. So let's hope price action does this. Let's hope price action comes down, gets Cody his targets, and then we break and close above the highs so I can get a chance to enter in a bullish move higher. That's what I'm selfishly looking at. But we're gonna let the market get our friends some targets first, right? I'm in no rush. I'm in no rush. All right, so that's what I'm looking at. Aussie dollar again, looking for a break and close above again. Bigger picture, there's not going to be much slower time from here, I don't think. Bigger picture, I mean, we can move to, what was it, 70s? I think it was 70, 71s, somewhere around there. But there's a lot of, last said 69 even could be a sneaky level as well. Right in here. So yeah, there's a lot of room to the upside. So again, now it's just it's what trading is. It's just a waiting game. Waiting. By the way, speaking of waiting, if you're waiting for the Euro Aussie, we started retracing back into that channel. So if you're looking for shorts, keep an eye on this. Look for your entry reason. This is your first area. This is not a pair I personally trade. It's not my portfolio, so I can't touch it. But this is the same exact situation as dollar Canada. What I would love to see for a very aggressive entry would be the RSI go overbought and then a continuation down. Now, what you're going to see me doing probably, well, I shouldn't say probably, if I can, right? I mentioned this for a while, right? December is really the only time I have to work on my trading. Unfortunately, thanks to you guys, right? December is really the only time I have to work on my trading, and so I'm going to dedicate this December. I've been talking to Latch about it. Is I want to learn. I want to implement some more stuff with the RSI, and mainly, again, my whole deal in trading is I've been getting more conservative and aggressive at the same time, right? Does that make sense? How can it be more conservative and aggressive at the same time, right? Well, I'm much more conservative in the trades that I look for. And a lot of you guys have noticed that. For you guys that have been with me for years, I'm a lot more conservative in the specific type of trade that I look for. Meaning I'm less gun-ho and taking all different types of stuff. I have a very specific trades that I want to look for, and I want to take advantage of them. So that's the more conservative nature. However, when I see those trades, those very specific trades that I want to look for, I want to get involved with them a lot quicker. So more aggressive in my entry. And that's why you're seeing, I didn't do lower low, lower closes up until about probably 4 years ago. So one of the things right now on my range bar charts, what I require is this for that aggressive lower low, lower close entry, or higher high, higher close, vice versa, is for that RSI swap. Right, that RSI to go directly from an oversold to an overbought condition, right? I would like to become even more aggressive. Because there are very good trending opportunities that you don't get that move. So we'll see. Real quick, here's interesting, right? Dollar Canada is rolling up. We're not doing anything on the RSI though. We're coming up right to this. We hit that 618. We're right below that. AB equals CD. Our RSI is just doing nothing right now. We're just consolidating, not even with divergence either. So we may continue to see a move, a pop higher here. Would not surprise me actually if we came up and tested the highs. All right. Any questions on not Euro, Aussie? Any questions on Aussie dollar? We're gonna go to its cousin next, New Zealand dollar. So hoping Cody gets his victory, and then I'm hoping we go the opposite direction. That's my opinion on this. All right, so let's go to New Zealand dollar. We got a head and shoulders and a cipher on the Kiwi here. Kind of delete my notes. I don't spoil it for you. Even though you've already seen this if you're on the trade floor. But Here's another another example of the importance of higher time frame, because it's going to give us a different story than the lower time frame. So, higher time frame, right? Daily chart, New Zealand dollar. What are we doing? What have we done? We have tested structure, but have we violated it? No. So that gives us what type of bias? How is our bias here? Do we have a bullish breakout bias, or are we still kind of like, oh, structure's holding? We may see a reversal, right? Probably going to be the latter, right? There's no reason to think to have a bullish bias, in my opinion, because we haven't violated structure, right? We've tried twice and failed twice. So you just keep that in mind before you ever even go down to the lower time frame. So I saw that this morning before I even saw this, right? This is going to be a head and shoulders pattern for you guys that aren't familiar, right? Head, shoulders, knees and toes, knees and toes, knees and toes, right? Left shoulder, retracement, head, retracement, symmetrical right shoulder, potential retracement. Now, I know that a head and shoulders top, this type of pattern, is a signal for a potential reversal. So if you can imagine this real time, right? If you can imagine this real time, I started off on the daily time frame and I said, hey, you know what? Price just can't seem to get past these highs. We've tried.
Lost.
Oh, there's the internet again. Hold on, guys. We'll continue on. We're talking about the New Zealand dollar here, and we're just talking about the process of doing analysis and how, basically we're like,
lost.
Are you kidding me? Really? Okay. Can you guys hear me again? It just dropped out, then came back in again. Let me know if you can hear me, guys. Mic check, mic check. Okay. Yeah. You could tell I'm about to flip out, right? There's one thing I need in my business, and it's good internet. We were supposed to get it fixed. Last year. And it did well until now. So this is kind of frustrating. But anyway, no use to complaining. You can't control what you can control, right? We're talking about the process of analysis here. And how, as traders, right, as technical analysts, just kind of the whole theme of the day is that we're not looking for trading opportunities, right? Has that been pretty clear? We're not looking for trading opportunities. We are looking to perform analysis, and we're looking for the trading opportunities to really stand out to us. And I say this because we can look at the head and shoulders opportunity here, and this is a bearish trade signal, right? This can be a strategy, right? Any of you guys trade head and shoulders? Right? This can be a strategy in its own right. But as I always say, it's not the what, but the where. And I brought that up in this week's Trading Edge video. It's not the what, but the where. It's not what you're seeing on the chart, but where it's happening. And that's a clever way of me just saying it's the overall analysis. So going back to the bigger picture of process, right? There's a process in which we do our trading. And I always yell at a lot of people that are confused because they don't have a process. They kind of bounce around from any chart, any time frame, right? Any pair with no rhyme or reason. And then they wonder why they're so confused. Have you guys ever been in that boat before? Where you're just like random pair, Canada yen, 15-minute chart. You're like, I don't understand what's happening because there's no process to what you're doing. You're bouncing around, right? We preach a process, not only a process in your analysis, not only a process in kind of your bigger plan, IPDE, but a process in even what time frames are you looking at, and in what order are you looking at those time frames in, and what is the purpose of those time frames, right? Higher time frame, lower time frame, trading time frame, or whatnot, or higher time frame, trading time frame, lower time frame. They all should have a purpose. So when I start my analysis, I always start with the daily chart. And the purpose of the daily chart is, again, just to get a bird's eye view of the market. I don't care about trading opportunities. I just want to see what's going on. I just want to peek out the window and be a little nosy and say, hey, what's going on the street below, right? And when we went through this, we saw rejections at previous resistance. So when we see that, we're just like, oh, bearish, right? You have a bearish engulfer right here as well. Oh, bearish, probably more bearish than bullish. And then you go down to that lower time frame and you see this head and shoulders and you're like, okay, head and shoulders top, right? What directional bias typically comes with this type of classic pattern formation? Bearish or bullish? Bearish, right? And now all of a sudden you're taking notes, right? You've got your pre-market checklist out and you're taking notes, higher time frame, blah, blah, blah. And you're like, wait a minute. Daily time frame or higher time frame, bearish bias. Trading time frame, head and shoulders top, bearish bias. Is there any question on which way you should be looking to get involved in the market? No, they're both, yeah. You should be 100% focused on selling. How can I look for selling opportunities? How can I get involved in this? And it's just that, again, it doesn't mean there's going to be a selling opportunity. I mean, if there's a selling opportunity, it doesn't mean it's going to win. But what it should give you is comfort in your directional bias. And the most important part of trading, in my opinion, you know, we always make a big deal, or not we, but people always make a big deal out of, you know, the perfect entry. The perfect entry, the perfect target, the perfect stop, right? Those are all important. Don't get me wrong. You need everything to kind of work together. But at the end of the day, you just have to be right in your directional prediction. That's what matters the most, right? You can have the perfect entry. If you're wrong in your prediction on which way the market's going to go, how successful are you going to be? So I think the biggest thing starts with just being able to make that directional prediction. And then the other things you can work on. I look at it like a sporting event, because I'm a sports nerd, right? And we've got a Philadelphia 76ers team, a basketball team I root for. We've got this player named Ben Simmons, right? He's like 6'10". He's a point guard. He's a freak of nature, very similar to LeBron James. There's only one problem. He can't shoot. He can't shoot to save his life. He hasn't he hasn't made a 3-point shot since he's been in the league. He made one in preseason. So there's always this big debate whether it's like, hey, should we keep him? Should we trade him? Is he a bust? And you look at it from a developmental standpoint, and it's like, well, this guy has all the tools to be a great basketball player. And he's a great basketball player already. He just can't shoot. So what does he need to work on? Shooting. You have time to work on that type of stuff. LeBron James couldn't shoot when he first came into the league either. A famous point guard named Jason Kidd couldn't shoot when he came into the league. And I think he ended up as one of the best 3-point shooters ever. So start with that foundational knowledge of being able to make the right prediction, the right directional prediction, and then just continue to work on the rest of the stuff. Continue to improve on your precision of where to take targets. Continue to improve on where you should put stops at. Continue to improve and get more, not necessarily aggressive, but change the way you enter a trade. Are you guys still not hearing anything? Am I wasting this entire rant? Okay. Okay, good. Continue to improve that stuff. And it's just going to support what you're already doing. But the most important thing you do is just understand how to read a price chart, understand how to make those predictions. Okay. Well, I thought it was wasted if it wasn't recording. And I'm like, man, very rarely do I say anything good. So when I do, I want it to be on there. So yeah, so routine's everything. All right, so there's two things here. There's the head and shoulders. All right. Confirmation of the head and shoulders will be a break at this neckline. If we do break, now this isn't one that has a massive amount of opportunity to it because we have a structure shelf right below it. So there's only so far this thing can go. Typically, you want to see your best head and shoulders. Your best head and shoulders patterns come after a very long directional move. So you have lots of opportunity to reverse. This one doesn't necessarily have a long directional move, but it still is a head and shoulders top regardless. Something else that's lurking down here, however, is also a potential bull cipher. So for you guys that are pattern traders, right? You've got an X to A right here, A to B, B to C. Sorry, I clicked the wrong thing. Let's just do this. Here we go. X to A to B, B to C, and then a CD right down here as well at about 63, 61s. So cipher pattern traders, obviously you want to look at this as a potential buying opportunity for your cipher. Head and shoulders pattern traders, you may also want to consider this level as a target taking area. Not only because it's a potential cipher, but why else? What's a small clue? Any small clues at that level? Putting you guys to the test today. Do you see it? Yeah, look at this green candle right here. What happens at that same level? I know it's hard to see with this kind of dotted line deal I got going on here. Yeah. Right? Right at the open of this green candle before the rejection. Right? It's not a bad level. So 2 opportunities here. Depending on how you trade the head and shoulders, there may not be that much room for expansion. Again, we're looking at this is a shallow one. We're looking at the neckline being about 63.90. So you got about 30 pips, 63.90 to 63.60s. Probably better off looking on a lower time frame to see that break and close above, the retest, and then continuation down. Similar to what we're looking at on Euro, Aussie, and Dollar Canada. So 2 opportunities there on New Zealand dollar. Did I put this into the pro trade log already? For you guys, I'm not on the site right now. I hope I did. If not, I'll go add it later. Hey, take care, ref. All right, let's go down to the lower time frames again. You can see a clear picture of our head and shoulders / cipher. And again, the key thing that you're waiting for, in my opinion, for head and shoulders is the violation of this neckline. Obviously, it's too late to enter at the right shoulder, so you want to see that violation of the neckline. That violation would confirm that the head and shoulders is indeed legit. And then you can either trade it on a sell stop lower or wait for a pullback trade and look for the extension. Questions on the Kiwi? Questions on the Kiwi. Latch mentioned something earlier. Did you say you were short Latch, or Latch they got a nice lower low, lower close before that shoulder on the 60? Looking at this area right here. Shabook. There you go. All right, let's go to Euro dollar, bigger bull bat, Euro yen, still got the flag going on, Aussie Canada flag, pound Aussie pullback, Euro Canada trend continuation, Aussie yen breakout. Let's go to Aussie yen next. We violate the neck is what I mean. We did not violate the neck, no. Oh, you mean looking at the lower low, lower close here as a reason to get involved there? Okay, yeah. So the neck wasn't violated. That's a wrong term, but I get what you mean. So Latch is looking at this, and this is something Cody uses a lot for his aggressive right shoulder movement, right? So here's your horizontal support and resistance. Oh, excuse me. Horizontal resistance from that neckline, or from what would be the first part of the neckline. Yep. And the reason I say it's not a violation of the neckline, because remember, the neckline isn't complete until you have the two areas. But I understand exactly what you're saying. One of the rules that our traders look for, as far as an aggressive right shoulder, entering aggressive with the right shoulder, is looking for a lower low, lower close here as we approach the resistance or the support line that comes with that first kind of neck touch. And then looking at this looking at that is giving this more confirmation because of that lower low, lower close. So kind of a filter of when to look for an aggressive shoulder trade. Very similar to what? What is this exactly the same as? Just kind of in a different disguise. What did we talk about earlier? And this was the whole point of the Foundation 2 course, for you guys to understand that we have all this kind of terminology and mess and whatnot floating around, but there's really only 3 types of trades. Like all these setups are under the same principle. They just come in different looks, right? Who remembers Cody's trade on Aussie dollar? What did we see here? What was his reason for trading? Violation of previous structure, pullback, aggressive first strike, lower low, lower close, right? What led to him looking to get short here? When in all of the scenarios otherwise, we're looking at a bullish opportunity here, right? It was this violation. This was kind of the first spark where he said, if we violate this, then look for that. Same exact situation here. In principle, violation, first strike. You could look at this in one more way as well. What is this? Rising channel. Break. Retest. Right? So 3 different scenarios, but can you guys see the general principle? It's all the same thing. And I think that's when you, I don't want to say know you made it as a trader, but when you can start looking at things as that, when you really understand the market. I always preach understanding just the general kind of concepts and rules of the market first before worrying about any of the details and all that stuff. When you can understand those principles, you're going to be so much more comfortable, because you're going to start to realize that the market only does a few things. It just does it in different ways. It just, it gives you this violation pullback off of a falling wedge, off of a head and shoulders, off of a sideways channel, off of a, XYZ, right? A, B, C, D, right? A million things out there. But instead of kind of being focused on, oh my God, rising channel, head and shoulders, this, that, concept, right? You're locked in because you know exactly what you're looking for. That's called building that RAS, right? You're locked in on a very specific thing, because that's all that really matters. All of the rest is fluff. It's the magician doing all of his, wavy hands and birds and lights and bells and whistles, but instead of kind of watching the dancing girls do all this other stuff, you're just watching his hands. And you're saying, just show me what you're going to do. Show me how you're going to pull that rabbit out the hat. Oh, I saw what that hand just did. Yep, I know. And that's kind of cool, because it means you're ignoring the junk. And again, my whole philosophy on the market is that I think 90% of what the market is pulling 90% out of, whatever number. That's what we say when we say most of the time, right? 90% of what the market does is just complete fluff and junk. Just randomness that has no purpose. But 10% of the time it's going to be a valid opportunity. And most of the time, those valid opportunities are hidden in between all of that fluff. So it's hard to see unless you've trained your eyes on what to look for, right? Think about a Where's Waldo book. What is it called in the UK? Where's Walter? Is it Where's Walter in the UK? Where's Wally? Right? Same thing, right? Wally's got all this stuff. Waldo's got all this stuff going on in the background. Very funny books, by the way, when you actually look at kind of what's happening in the background. Very hilarious. But it's all this stuff going on in the background, and then somewhere is this little guy in this striped shirt. But once you've done the book the first time, right, you know exactly where to look for, right? You're like, oh, I know he's in this upper quadrant. He's somewhere. I remember that. There you go. And it just makes life so much easier. Good stuff. All right, let's go to What did I say? Aussie yen next. Aussie yen. We're on breakout alert. For you guys watching the recording, the timer's going to be off. I stopped counting times because I had to reset my thing. So the order, I'll still give you guys the order of the pairs we looked at. But after like the first 50 minutes or the first hour, I just stopped keeping track of the timer because I have no idea what it is. All right, Aussie, what did I say? Aussie yen? Aussie yen. Dollar Canada gave me my lower low, lower close, guys, but no RSI confirmation. Well, actually, it's potentially giving it to me now, but no RSI confirmation. So this looks like it's going to be one where it's not going to be an opportunity for me to trade. And this is the reality of trading. We've been watching this since the beginning. 7:30 this morning. It's the first one we looked at. Been watching it, waiting for something very specific to happen, and it has not given it to me. Welcome to trading. Now, earlier we also talked about this. We also talked about multiple ways to get involved, right? We hit the 618. This can turn into a Gartley pattern. So always prepared. Always prepared. And yeah, the 15-minute risk reward wasn't, those candles were so big it wasn't going to work. I'll show you guys real quick the 15er. Get over here. Get over here. Here's what it looked like on the 15. But such a deep retracement. It would have been an inverse risk reward. Drop, euro yen, drop. Ooh, good. I want to see it drop too. Come on, baby. All right. Aussie yen. All right. So perfect. Aussie yen will go a little bit higher here. To the daily time frame. I'm looking for a bullish move here. Again, with same concept as same idea as Aussie Canada, Aussie dollar, excuse me. We had a higher high, higher close here. We had a higher high, higher close there. Was initially looking for a higher high, higher close here as well in hopes that we can continue up higher to about, I guess 75.50s was it and 76s. So this we may actually be out of steam here, but let's continue down and see. So our most recent move here on the 4 hour was a higher high, higher close, another one. If we pull back to this level, maybe an opportunity to get long. Now again, the room for expansion is probably going to be done. But we can still potentially look for maybe a retest of previous structure highs. If you're looking for an aggressive level right here, here you go. First little pregnant pause there. So 75.04. If not, this bigger kill zone could be something we look at. All right, why are we seeing this yen strength? What's happening, guys? Anybody know? Who's got their ear to the street? Spot gold tumbles. U.S. stocks higher. Dollar yen moves closer. U.S. China tariffs. Trade balance. What's the Twitter tell me? Twitter did something to their algorithm. I'm getting these stupid ads. Getting these stupid ads, but I don't want to see them. I want to see what's happening in the news. Looking for a Forrest Gump trade. Anything of yen? Let me just search. JPY. Ouch. Hit my elbow. Japanese yen gains, lose steam. This is just curiosity, nothing trading related. I'm always curious why things move. Why things move when they do. what I do is I'll take a note of it. Oh, you know what? My real quick, my Forex factory never changed. It didn't change the clock automatically. I don't know why I did that. I was wondering why had news coming out at 9:30. All right, 9:45 final services PMI. That makes sense now. US dollar news. There we go. Okay. Daylight savings time strikes again, guys. All right, so let's head over to dollar yen next. Let me just take a quick look at Euro Canada. We are continuing down on Euro Canada. Let's do Euro Canada next. There's still a little bit. There may still be a little bit of meat on the bone here. This was a trend continuation opportunity that was on my radar earlier. Very similar to Euro Aussie. So this is going to be kind of very familiar what you're looking at. But Euro Canada here on the daily. You can see we've been bearish for a few days now. Now, much more opportunity here on the daily. Kind of the first danger point is going to be right here where this mouse is at, if you can see it. But it could go lower. It could go lower. This is one of the trend continuation opportunities on my radar earlier. So the first zone in which I would look for targets is going to be right here. And again, we're almost there. That's at about 145.50. We're about 145.60. So that's why I said it's probably at the very end. Probably should have looked at it earlier, but we had other stuff to talk about. Let's just see if there's anything left here. Let's go down to the hourly. We'll end up going down to like a range bar chart here, but I think it's going to be done unless we get a pullback. Yeah, we still could get a pullback. So let's check a range bar chart. Euro Canada. There could still be a nice pullback trade here. And there's actually not. So, all right. Let's go to Euro again. That was sort of a waste, but we looked at it. So Euro again. We have our flag pattern here. This is an interesting flag pattern because we have not broken previous structure looking left, right? But this is when I'm looking for confirmation of a break and a potential move higher. Keyword being confirmation of a break. Or if I can get an opportunity to enter at the very lows here, then that's an opportunity for me to trade it as well. So positioning myself before the break. And what we looked at over the weekend here was a 26.18 opportunity, right? Where we had a double bottom down here, the market push above and looking for a retest and a hold once again of our previous structure lows. This was also one that Stuart, it was you, right, yesterday? Getting scared out of your trade. And we had to calm Stuart down. We said, Stuart, is there any reason you should be afraid of this trade? Was there any violation of structure or anything like that? He was like, no. And Stuart stuck with it, and hopefully it rewards you for your patience and discipline. Hopefully it does that. Well, look, I'll tell you, it's hard. And I know you said that my opinion had no bias on it, but I used to freak out every time I would be in a trade, and then Jason Stapleton would come on and be like, hey, guys, I'm looking to do this. And I was like, oh, no. Hey, Jason, you meant to say short, not long, right? No, short. Crap. Like a much longer term one, right? Like it's going to go down before it goes up, right? Nope. I think it's going to go straight down. Damn it. Shoot. Well, where your stops at? You start adjusting your targets. I put my targets right before I put my stops right now. So I used to freak out every time that would happen until I had the confidence to just be like, I don't care what he says. And that's when you realize like you're different traders. But that was tough. And even as a teacher, it would be hard because again, that's my mentor. It'd be hard when I have an idea and he comes in with another idea and it's like, oh man, And someone in the live room is like, well, you know, Akil said he was looking at this. And he's like, I don't care what Akil says. I'm looking at this. And I'd be like, Jason said what? Oh, no. So I understand that. But again, that's why we have to be grounded in our rules and ignore what everyone else says. So the moral of the story today was, guys, ignore your coaches. When your coaches, when me and Greystone tell you something, just ignore it. So hopefully we push down. Again, what I would love to see is a test and a rejection here. I'd love to see a test of this level. This would be an ideal situation because the market always gives us ideal situations. I'd love to see a nice little pin bar down here. That'd be a nice little opportunity for me to get long. But yeah, I'm looking at, like Aussie dollar, I'm looking for either a violation of this level and a chance to get long, or some way to get involved here at the lows. Because it is a riskier situation. We don't have confirmation of a bullish move, which is big. But if I can when I can put myself in situations that have very low risk, I'm allowed to be more aggressive and more risky with my trades, because if you're wrong, you're not really giving up that much. So stalking Euro Yen as well. We may be on Cypher alert here. Let me just load up. Let me load up a different chart here. We may be on Cypher alert here for Euro Yen. Just to follow up. Just missed. All right. Thought we'd be on Cypher alert. That would have given me an aggressive entry. Just missed the C leg by a little bit. But check your data, guys. Check your data. So yeah, I'm looking for a move down here. So wherever Stuart's targets are, that's where I'm looking to get involved. So again, rooting for Stuart. Hopefully it pushes down, man. That would look. This is I want to get involved down here. So I hope it pushes down. 120.01. Okay, maybe not that far. I'm not hoping it pushes down that far. So maybe we're gonna fight a little bit. Now let me ask you this. Okay, never mind. That's actually a decent size away. Okay. All right, I'm not rooting for you anymore, Stuart. I'm sorry. We're enemies. And I'm not one you want to be an enemy with. Because 50% of the time when you go against me, you're going to lose. Yeah, good draw by Everton. Bad injury. The next 2 weeks, someone was telling me this week, Everton played Tottenham, who are all types of a mess. Yeah, someone was hitting me up on Instagram, and he's like, this is a must-win for Everton. I'm like, no, it's not. What are you talking about, a must-win? It's not a must-win at all. The next 2 weeks, those are must-wins. Next week's are the battle of relegation. The bottom four is playing. Stay above the 3. Those are the must-wins. Spurs, not a must-win. I didn't actually see the injury. I only saw the first half of the game, so I didn't see it. I don't want to see it. I've heard enough. I've got enough messages about it. Which is a shame, man. He hasn't had the best campaign for us today, or this year. But luckily we're deep in midfield. Hopefully that gets Segerson back into it, and maybe we'll keep Davies out there. Or maybe Schneiderlin. TV didn't show it? They had to show it live, yeah. No? They didn't show the replay. Yeah, I probably would have thrown up. Yeah. That's like, who was it a couple of years ago for might have been Man U. The guy broke his leg. I mean, it happens routinely, unfortunately. Oh yeah. Anyway, enough injury talk. I get as someone who's always injured, I get squeamish over that. Okay. All right, yeah. So we'll get you guys out of here soon. Let's just take a look at a few more that are on my radar. Let's take a look at. I got two more we can take a look at, and I'll get you guys out of here. Let's go pound Aussie. This was another pullback trade. Yeah, Luke Shaw. There we go. Yep, that was it. Yeah. Ooh. Ooh. Something else happened here on pound Aussie. Okay, so. So I was looking for a pullback trade here on pound Aussie. Bone came out of his leg. Okay, no more. Pound Aussie. Higher high, higher close, right? Retest the structure. Right? Higher high, higher close here. Right? Definitely room to continue higher. We can retest structure. Ugh. Market's kind of putting in this little drooping flag pennant thing that doesn't look good at all. Right? Coming back down into a previous level of consolidation as well. We go down to the hourly, however, we start to get a different story down here, right? We'll kind of skip to the 15, but if you're looking to involve yourself in a bullish trade, I'm sorry for rushing this a little bit, but what do we have here? Same type of head and shoulders type deal, right? So you can look for this higher high, higher close here. Look for a pullback into this shoulder and look for a buying opportunity. Again, short term, you can look for a retest of these highs up here around right above the 187. 187 on the undercover cop, right? Or again, if you're looking for to hold this as a bigger picture trade, this is a bigger, this is a bigger pennant pattern, flag pattern that came above previous structure. And there is room to go higher. So again, I see a bunch of people got to head out, so I just want to rush through this real quick. Last one, euro dollar. Beautiful symmetrical double top. This is a textbook one. Maybe not textbook, but a perfect symmetrical double top. It just doesn't come at a place that I have any interest in. However, excuse me, I'm taking notes here. However, if we do push lower here on the 4-hour, you'll see that there's also a bigger potential bat pattern forming, right? So if we take a look at, I'll just load up euro dollar, my ninja, make it easier for us. If we continue to push down, the new ninja makes you do all this extra writing for no reason. If we continue to push down from this level, right, we can have a potential X to A to B, B to C, and a CD completion down here at about 110.12 for potential buy. And again, that's above that 110 even handle as well. So potential bat there on euro dollar, right? Any questions before we get you guys out of here? Again, apologize for the internet stuff today and for the rushing at the end, but a lot of people are kind of heading out, so I want to kind of finish up on what I had. Lat says New Zealand, Canada, tickling target twos. Let me just get this euro dollar trade in here real quick. What did that euro Aussie ever retrace? Oh, you bet it did. Look at that, boys and girls. Look at that. Look at that. That's your pullback trade, guys. I mean, how complicated was that analysis? Euro pound? Sure. What time frame and what question do you have about it? Just gonna finish getting this euro idea into our trade floor. And then we can take a look at euro pound. Does it have to go lower? No, it doesn't. But in fairness, the markets don't have to do anything. In general, the markets will do whatever they want whenever they want to. So it doesn't have to go lower. Now, are you asking, can it go lower? Is it more likely to go lower? Mic check, sounds the one, guys? Okay. Can it go lower? Yes. So if we're likely to go lower, we're likely to test these lows down here. So there is room for it to go lower, yes. Does it have to go lower? No. But essentially what we're putting in here is another kind of wedge pattern. So what I'd want to see for lower, and there's not a lot of, well, yeah, 85.99 to 85 flat. There's room here. What you'd want to see, in my opinion, is a violation of either the trend line or the horizontal level of support. And that would give you confirmation that we're more likely to go lower than go higher. Does that make sense, guys? And I don't mean to pick on you, but just when people, we want to break the habit of saying, hey, does price have to do this or have to do that, or price will do this or will do that, because we need to understand that price can do whatever it wants whenever it wants to. And what we're looking for, what we're doing when we're doing analysis, is we're not looking for what price will do, right? Because if price will do it, we would always bet everything on every single trade. But rather, we're looking for an idea of what is price more likely to do. We're weighing the odds. Are we more from this area? Are we more likely to go up versus down? Or are we likely to go this far down before we go this far up? And then we're using that if-then syntax for confirmation. Okay, well, if this happens, then that means we're more likely to do this versus that. So, yeah, we certainly have room to go lower. I would certainly have a more of a bearish bias than a bullish bias. I think for confirmation, again, if you're kind of a trend line trader, confirmation, you want to see a violation of this lower trend line. If you're more of a horizontal support and resistance trader, you want to see a violation of this 85.70 area. And, your zone's going to be a little bit higher, 85.20s. I think 85 even handles a decent level to shoot for. So there is opportunity there. Even if you use the horizontal support, there's opportunity from 85.70s down to about 85 flat. So yeah, I think there's definitely opportunity to get lower. Good stuff. Good stuff. Anything else? That was Euro Aussie or Euro Pound. Add that to the list. Did anybody take the Euro Aussie trade? I didn't hear anyone mention it. Here would be your lower low, lower close right here. But again, there's no RSI confirmation if you're in need of that. Aside from, and this is kind of something that I plan on working on in the winter. Aside from a break and dip back below your 50% level. Did we hit 66? Yep, we did. So, all right, good stuff. Recording may be up a little bit later than usual. Again, I'm gonna try and run and get a new internet box, perhaps. Although it's working fine now, so I don't know. We'll see. But I'll see you guys tomorrow, same time, same place. Until then, plan your trade, trade your plan. Take care.